Welcome, curious learners, to another deep dive.
Hi, everyone.
Today, we're taking a shortcut to getting smart about a company that's really changed how a lot of us travel.
Definitely.
We're going to unpack the latest from Airbnb, specifically their 2024 Form 10K annual report, and pull out the key things you need to know.
That's right. We're digging into how Airbnb, started back in 2007. Just 2 hosts, 3 guests in San Francisco.
Amazing start.
Yeah, and now a global marketplace. Over 5 million hosts, more than 2 billion guest arrivals. Pretty much everywhere.
Incredible scale.
So our mission today is to really get under the hood, understand their business model, break down the key financials, look at their shareholder value strategies, and see what's ahead for this travel giant.
Okay, let's unpack this business then. How does Airbnb's core platform actually, function? And what are they doing to keep it fresh, innovative, and maybe most importantly, trustworthy? It's such a huge scale.
Well, at its heart, it's a global two-sided marketplace. Simple concept, complex execution. On one side, hosts offering unique stays, rooms, homes, apartments, you name it, and increasingly unique experiences, too.
Yeah, the experiences part is growing.
Exactly. And on the other side, you've got guests looking for, well, maybe something more authentic, a local connection when they travel.
Makes sense.
What's interesting is their commitment to innovation. They consistently roll out major product updates twice a year.
The biannual releases, yeah.
Right. And the focus is really on making stays affordable, high quality, and crucially reliable.
And reliability, safety. On a platform this massive, with millions of people interacting, that sounds like a huge challenge. What's this system of trust they talk about? What does that actually involve?
Yeah, it's foundational. Their system for trust is incredibly comprehensive. It has to be, right?
Absolutely.
It uses everything from, host and guest reviews, that's the bedrock, to really robust account protection, secure payment systems, proactive fraud and scam prevention measures. They also do watch list and background checks where it's relevant and legally allowed.
And insurance. I know that's been a big topic.
Definitely. Critical components include insurance, specific host protections like air cover, which is a big deal for hosts.
Right.
Plus things like booking restrictions to try and prevent problematic reservations, an urgent safety line available 24/7. They've even rolled out anti-party technology.
Anti-party tech. Interesting.
Yeah, it's a good example of them using tech proactively to tackle potential issues before they blow up.
It really sounds like technology, especially, the cutting edge stuff, plays a massive role in building and keeping that trust.
Oh, absolutely. The 10K really highlights a significant use of sophisticated AI and machine learning.
Right. AI is everywhere now.
It is, but this isn't just buzzwords for them. It's actually built into core functions. Things like fraud detection, personalizing the listings guests see.
To what matches you better.
Exactly, and even enabling customized real-time community support. What's really fascinating is how they use this AI to improve things for both guests and hosts, while also managing the, let's face it, inherent risks of a global platform like this.
Yeah, it lets them scale efficiently while keeping an eye on safety.
Precisely.
And speaking of scale, what about their global footprint? Where are they actually operating, and what challenges pop up when you're in so many different countries and cultures?
They are truly global. I mean, hosts in over 220 countries and regions, more than 100,000 cities.
Wow.
And get this, a significant chunk, 58% of their 2024 revenue actually came from listings outside the U.S.
58%. Okay,
Yeah.
so international is key.
It's huge. It's core to their strategy. But you're right, it brings a whole host of complexities. Operational challenges, different tax rules everywhere, regulations, compliance issues. It's unique to each market.
Like local tourism laws, data privacy.
Exactly. Data privacy, local regulations, different tax structures. It's a constant juggling act. To manage it all, they have about 7,300 employees directly.
Oh.
And they rely on a global network of around 11,000 third-party workers, mostly for community support. It's a big operation.
So we've got this picture of Airbnb's operational engine: trust, innovation, global reach. But how does all this, the strategy, the international footprint, actually play out in their financials? Let's dive into the 2024 numbers. This is where it gets really interesting. What were the highlights?
All right, let's talk money. Looking at their 2024 results, the top line, revenue, looks really strong. Airbnb brought in just over $11.1 billion.
$11 billion. Wow.
Yeah, that's a solid 12% jump from 2023.
Okay, 12% growth. What drove that?
Primarily, it was driven by a 10% increase in what they call nights and experiences booked. That hit 492 million.
Nearly 500 million nights and experiences. That's hard to wrap your head around.
It really is. We also saw a modest 2% increase in their average daily rate, the ADR. That's the average price per night across the platform.
So prices up slightly.
Slightly overall. Interestingly, EMEA, Europe, Middle East, and Africa showed a stronger 5% increase in ADR. That signals maybe some good pricing power there.
And where's the money coming from geographically?
North America is still the biggest piece, 45% of total revenue. Then EMA at 37%. Latin America and Asia Pacific each chipped in about 9%.
Okay, that revenue growth sounds strong, but I saw headlines that net income actually dropped significantly. That seems counterintuitive. What happened there?
That's a really crucial point, and it's easy to misunderstand if you just look at the headline number. Net income did decrease quite a bit by 45%, down to $2.648 billion in 2024, from nearly $4.8 billion in 2023.
45% drop. That's steep.
It is. But here's the key context. The main reason wasn't a sudden problem with their core business in 2024.
Okay.
It was mostly due to a huge one-time non-cash accounting benefit they got back in 2023.
A benefit in the previous year.
Exactly. In 2023, they released a $2.9 billion valuation allowance on some U.S. deferred tax assets. Think of it like they had built up tax credits they couldn't officially count before.
Right.
And then suddenly, they could. Boom! Massive paper gain in 2023 taxes. So in 2024, they're back to a more normal tax situation, actually using some of those assets, which means a more typical tax expense.
So the comparison year, 2023, was artificially high because of that tax item.
Precisely. It makes the year-over-year net income look much worse than the underlying business performance really indicates. Now, it was partly offset in 2024 by a favorable tax settlement with Italy.
I saw something about that.
Yeah, that reduced some prior period withholding taxes and fees by about $770 million plus related costs. So that helped 2024's number a bit, but not enough to overcome the comparison effect from 2023's big tax benefit.
Okay, that makes sense. So if we look past that big tax swing affecting net income, what do other measures like profitability, cash flow tell us about the actual health of the business?
Right. This is where the story looks much better. Adjusted EBITDA that gives a clearer view of operating profit before things like taxes and non-cash items that came in at $4.041 billion in 2024.
And how does that compare?
That's up nicely from $3.653 billion in 2023. And importantly, the margin held strong at 36%. Shows good operational efficiency.
36% margin, okay.
Even more impressive, maybe, is their free cash flow. That's the actual cash the business generates after expenses and investments.
Real cash coming in the door.
Exactly. That increased to $4.484 billion in 2024, up from $3.8 billion the year before. And that's a margin of 40%.
40% free cash flow margin. That's very healthy.
It's incredibly strong. It shows their operations are just spinning off a substantial amount of cash.
So with all that cash coming in, where are they spending it? Let's look at their costs and expenses. Any surprises there?
Okay, let's break down the spending. First, cost of revenue. That went up 10% to about $1.9 billion.
That's in there.
Mostly things like merchant fees, processing payments, basically, which naturally go up as gross booking value increases. Also, higher cloud computing costs. They need more server power as they grow.
Makes sense. Infrastructure costs.
Right. The good news there was a reduction in chargebacks, which maybe suggests their fraud prevention is working better.
Oh, okay. What else?
Operations and support costs rose 8% to $1.28 billion. That's driven by higher payroll, more customer service costs because more nights were booked, and also higher insurance premiums. Pretty standard stuff for growth.
All right.
Then there's sales and marketing. That saw a big jump up 22% to $2.15 billion.
22%. Wow, they're spending heavily on marketing then.
Yeah, that tells us they're making a significant investment in growth, pushing hard on marketing activities, search engine marketing, trying to capture more market share. It's an aggressive move.
Okay. And the last big category.
General and administrative, or G&A. This actually decreased substantially, down 41% to $1.185 billion.
Decreased. How?
It was largely due to that Italy tax settlement we mentioned. It reduced their non-income taxes and related fees significantly, giving G&A a big boost downwards.
Got it. So that Italian settlement really impacted the expense side too, not just the tax line itself.
Correct. It lowered those specific non-income tax expenses booked within G&A.
So it's clear these tax matters, the big benefit in 23, the settlement in 24, had a huge impact on the reported net income. Looking at their balance sheet then, what's their overall cash and debt situation like at year end?
They are sitting on a very strong pile of cash. As of December 31st, 2024, cash equivalents, and restricted cash totaled $12.76 billion.
Almost $13 billion in cash.
Yeah, very healthy. On the debt side, they have about $2 billion in convertible senior notes due in 2026. The fair value was slightly lower, $1.9 billion at year-end.
Any other major debt?
They have access to a $1 billion revolving credit facility, basically a big credit card they can use if needed. But as of the end of 2024, they hadn't drawn anything on it other than about $19 million tied up in letters of credit.
So tons of cash, manageable debt, lots of flexibility.
Exactly. A very strong liquidity position.
Okay, so given that financial strength, that huge cash pile, how is Airbnb thinking about creating value for its shareholders? And maybe switching gears slightly, what are the big clouds on the horizon? What risks are they highlighting?
Right, shareholder value. Their stated strategy is pretty clear. They plan to keep future earnings and reinvest them back into the business.
So no dividends planned.
No, they state they don't anticipate paying cash dividends anytime soon. The focus is on reinvesting for growth, platform development.
But they are doing something with that cash for shareholders, right?
Yes, absolutely. They are actively returning value through share repurchase programs, buybacks.
Okay, how much are we talking?
Their board authorized $2.5 billion back in May 2023, and then added another huge $6 billion authorization in February 2024.
$6 billion more.
Yeah. And in 2024 alone, they actually bought back 24.5 million shares of their Class A stock for $3.4 billion.
$3.4 billion in buybacks in 1 year.
Correct. And they still had $3.3 billion left authorized under the program at the end of the year, so they're serious about it.
What's the impact of that?
Well, it reduces the number of outstanding shares, which generally boosts earnings per share. It can also signal that management thinks the stock is undervalued. It's a common way to return capital besides dividends.
Is there a downside, like that new buyback tax?
Yeah, that's worth noting. The 1% excise tax on share repurchases from the U.S. Inflation Reduction Act, that costs them about $20 million extra in 2024. Not huge relative to the buyback amount, but it's a cost.
Okay, so prioritizing buybacks, signaling confidence. But what are those big risks or challenges they see potentially impacting them moving forward?
That's a great question. Because while the buyback signals strength, that cash could be used elsewhere, right? R&D, acquisitions, a buffer.
Right.
And the 10K definitely flags several critical risks. Many tie back to that global complexity we talked about.
Like taxes again?
Taxes are definitely high on the list. We saw the impact already. They mention ongoing disputes, like a proposed $1.3 billion tax increase from the IRS related to how they value their international intellectual property.
Oh, $1.3 billion.
Yeah, it's a proposed adjustment, so it's under dispute, but it's significant. Plus, potential liabilities for lodging taxes, other non-income taxes in different places. It's just a constant challenge navigating global tax rules. And regulations. Always a factor for them.
A huge factor. Regulatory scrutiny is constant. New and changing laws around data privacy, data security.
Yeah.
And now, artificial intelligence.
AI regulations.
Yes, things like the EU AI Act coming into force.
Mm-hmm.
New state laws in the U.S. popping up. California, Colorado, Utah. These could mean significant costs, changes to how they operate, especially given how much they rely on AI.
Makes sense. What else?
Well, there's the risk of, bad actors, criminal or fraudulent activity on the platform. That impacts the perception of safety, which is absolutely critical for their trust model.
Can't afford hits to trust.
Exactly. Competition is also fierce. The travel industry is crowded. Traditional hotels, other online platforms, new niche players, they're all fighting for travelers.
Sure.
Cybersecurity is another big one. They rely heavily on IT systems, third-party providers. A major breach would be damaging.
Of course.
And then there are the broader things, macroeconomic conditions, recessions, global events like pandemics or conflicts, and foreign currency fluctuations.
Right. You mentioned 54% of revenue is non-USD. Yeah, so if the dollar strengthens significantly, those foreign earnings translate back into fewer dollars, impacting their reported results. Currency risk is real for them.
And anything else structurally.
One last point they mention is their multi-class stock structure. It concentrates voting power with insiders and early investors. That's something investors always need to consider. So really, the big picture risk is about sustained adaptability. Can they keep navigating this dynamic, complex global market?
We've definitely taken a deep dive into Airbnb's 2024. We've uncovered those operational innovations driving the platform, unpacked the financial picture getting beyond just that net income number, and looked at their strategy for shareholder value and the challenges ahead.
Yeah, what really stands out, I think, is how they're managing to achieve pretty significant growth and maintain strong profitability while juggling these really complex global tax issues and the constantly shifting regulatory sands.
Quite the balancing act.
It is. And the fact that they continue to generate such strong free cash flow, that 40% margin, and reinvest heavily in the platform despite all these headwinds, it really speaks volumes about their operational model.
So, wrapping this up, what does this all mean for you, our listeners, the curious learners, trying to get that informed shortcut?
Well, I think it shows that understanding a company's financial health means going way beyond just that top-line revenue or the bottom-line net income number.
You got to dig deeper.
You really do. Diving into the reasons behind the numbers, like understanding those one-time tax impacts versus the consistent strong cash flow, gives you a much clearer, much more nuanced picture of how the business is actually performing.
Right.
And maybe it leaves us with a bigger question to ponder. We're in this era where companies are increasingly global, super reliant on advanced tech like AI, but also facing this tightening web of international regulations and tax complexities. How will companies like Airbnb balance that relentless drive for innovation and growth with these ever-present, maybe even growing compliance challenges?
That's definitely something to think about. How do you innovate aggressively while staying on the right side of rules everywhere?
Exactly. Something to mull over, perhaps, as you plan your next day or experience.